Gul Tekchandani as well joins in to talk about the fundamentals of the market and his thoughts on individual sectors. Gul, hi, morning. Lots of things to watch out for, like Sajeev as well was pointing out. You got GDP, you got the RBI policy as well as the budget. But things seem to be now getting into place. Crude has somewhat softened this week. You do have the Dow, which has climbed to already 13,000 plus levels. Can we see a pre-budget rally?
We are into one actually, and if the UP elections go the way what people are talking, then I think there will be a further boost, because there will be a feeling all around the market that the reforms will continue with more aggression if SP comes to power. So if these kind of things happen, and obviously there's so much liquidity all over the world that it might kind of come into places of high growth, and India is among one of them. So what you are seeing is much along the expected lines, and if today the LTRO comes up with another humongous number, then obviously more money will be chasing stocks in India. And you have only had one paper offer recently of MCX, otherwise there's a shortage of paper, quality paper effectively as well. So obviously stocks will move up rather than move down, and if oil continues to its trajectory down, then I think you're on terra firma.
Gul, yes, central bankers can control liquidity. Yes, the Fed can, pump in more money. But ultimately, it is commodities which really derive or decide the growth. Can global markets afford to ignore crude, copper, aluminum, zinc? All these commodities are at a 6-month high.
No, they can't. But by definition, they haven't gone into the same stratosphere as possibly what you have seen Indian stock market doing. Is amongst the best performing, and if China has a soft landing, then you can possibly discuss commodities more aggressively. But till that time, I think one cannot kind of take assured bets, and commodities, as you know, are not something which you can focus on a timeline basis. You can't take a 1-year, 2-year bet on any commodity. You got to review it every day, what's happening on the LME, what's happening on the exchanges all over the world, and focus on those kind of things. I'm not a very good judge of commodities, Nikunj. So I'll just say that stock markets right now are driven by liquidity, and they will continue to be. And obviously, Indian economic environment will improve, because we are at a nadir now, and we have to kind of pick up from here by definition. And if RBI cuts the rates, then that will add fuel to the party.
Gul, that's precisely the point that I was coming to. Do you think the RBI would cut rates? Because crude prices have somewhat escalated, even though we're just seeing the softening kick in the last 4 trading sessions or so. Does it make for a strong case for the RBI to cut rates this time around, or are we again going to see just a CRR cut?
No, may not be immediately a rate cut. We have all been talking about a rate cut somewhere in the April-June quarter. So I think it's best left to RBI to decide. But don't forget that liquidity in the domestic environment is fairly tight.
Right. Gul, if I take the clock back, the QE2 program was announced on 4th of November 2010. And 5th of November 2010, Indian markets peaked out. So the assumption on 4th of November was that Fed will print more money, it will pump more money, and that will drive emerging markets. But that script did not play out. Do you think this time around, after the LTRO program, maybe equities or commodities, they will peak out?
No, hopefully with the Indian government now looking to get set for action, you'll see a better scenario. Last 1 year, in 2011, I think everything was on autopilot, Nikunj. And, there is talk of that policy paralysis, which each one of us has talked about. Now, hopefully, the government seems to be getting its act together. You've seen that they have started moving on the divestment scenario. Hopefully, there's concern even on subsidies. So you're going to see a fuel price hike and even a crude and LPG hike soon after these elections. So the government is tackling what it needs to tackle, and what I'm told, for whatever it is worth, is that there will be a big push on infrastructure this time, and that's exactly the reason why you are seeing infrastructure stocks going haywire.
Gul, the current consensus on the street is that interest rates have peaked out, and if not this quarter, maybe by next quarter, like you indicated, Reserve Bank of India will cut interest rates, and just about everybody is currently overweight on rate-sensitive stocks. Do you think that trade is getting slightly crowded now?
Depends on the stock. You can't arbitrarily say that the whole place is crowded. But if you sit and think about some of the, rate sensitives, including some of the smaller banks, people are shying away from them. But the PSU small banks also provide an opportunity because most of them are at 1.1 time or one time book. They're not, you saw the December results, the NPAs weren't such a big worry. And my thinking is that you'll see the movement in banks going up further, obviously in some of the rate sensitives as well, because basically we haven't yet seen the beginning. Nobody has the confidence, frankly. Everybody talks about that this is a liquidity driven rally and there are no fundamentals to it. But markets always decide, as you know, ahead of every scenario. So when you see the fundamentals and you have a 2020 vision, you may not have the price.
So Gul, at the current valuations, what's a good sector or stock to pick up currently? Would you bet on financials, as is the case with most market experts, that when the market begins to pick up, it is going to be financials which are going to be the drivers of the rally?
Yes, I would bet on financials, I would bet on autos, particularly four-wheelers, I will bet on infrastructure, I will reduce my weight in FMCG, these are called defensives, and to some extent in pharma, and I will be neutral on IT. So this is the way I would pan out my portfolio. I won't sell down my IT stocks because they manage the portfolio in a downturn very well, but effectively not add aggressively to anything in FMCG or in pharma for that matter.
I'm going to ask you a tough one now. Which is one stock which you own from last 5 years and you have no intentions of selling that stock for next 5 years?
I think it can be easily said that one would be obviously Reliance, and obviously the second one would be, I think, TCS, if I'm not mistaken.
One multi-bagger you are betting on, because I've known you over the years, and over the years you've identified not one but over half a dozen multi-bagger ideas.
No, I think Nikunj, God has not been so kind. He's only allowed me to pick the market timing a little better than what I used to do earlier. So let's leave it at that. And we can discuss this personally off air.
So you don't own mid-cap stocks? You only own large-cap stocks?
No, I own mid-cap stocks. There are several of them, and several of them hurt me also during the last 1 year.
If I insist on a name?
No names, Nikunj. No, Nikunj. Just I don't talk names, as you know. It's not fair on the viewers, to be honest.